All right, so the FOMC cut interest rates today, but instead of getting the typical reaction of what you would expect with yields falling and stocks rallying, we didn't quite get that. So I'm going to break down in today's video why, what happened, what was the reaction in the various markets. We got a continuation of what we saw yesterday in terms of breadth to the point where we got a really important signal on that breadth today. So I'm going to break down what that signal was, the implications of that, and then talk about what's driving this market from a sector rotation standpoint, and why does that matter. So all of that's in our market outlook preview. Let's go ahead and get started. Today is Wednesday, October 29th, 2025. This is the market outlook from marketscholars.com. My name is David Settle. Before we get going too far, click this link right here. That takes you to our market outlook blog post. It's free for anybody to see. You can see a lot of information here on what happened in the markets, why it matters, what to expect going forward. So a lot of really good information here that you get for free on our site. You get the preview video at the top, the one that you're watching right now. You get that at the top as well. Again, you just go to marketscholars.com, click that link as I showed up there. You can see you get access to all of these blog posts, excuse me. Now, when you click on that and you're not logged in, this is the page that comes up. So just scroll down. You can see if you're already a subscriber, just click on login here. If you're not, click this blue button. It takes you to this page, this link right here. Click this link. It also takes you to this page. Again, you can just subscribe for free. And like I said, you get today's blog post as well as all of the blog posts in the past, as well as going forward. All right, let's start off with the S&P on the market forecast indicators. You can see, again, we were just down barely. Yesterday, we closed at 69.80.89. Today, 68.90, excuse me, 59. So down literally just 0.3 of a point. Even though the candle looks bigger, the body looks bigger. We had a bigger range after the FOMC announcement, but ultimately we were just down 0.3 points because we had gapped up, right? 8 straight days that we've gapped up to the upside, where 75% of the gains came overnight. And we'll see if we get 9 straight days of gapping up. We were down early because of the earnings announcements after hours, but then the trade agreement with China may change that. So we'll see if we end up getting 9 days in a row. But the big news today obviously was the Fed, and the Fed not cutting rates as widely expected as they would. Here, let's bring up the. There we go. They widely expected to cut rates, but they also came out and said that December was not a foregone conclusion. In fact, he seconded that by saying that there's actually far from being a foregone conclusion. So as a result, yields really took off. You can see the 10-year yield breaking up above the highs of a lot of recent days, coming off of a cluster. You can see the momentum line getting up to a strong level. We crossed 40, 50, and 60 on the near-term line, with that momentum line being higher. And so the near intermediate line crossing above 20, also crossing above the market sentiment. So all kind of nascent, really good bullish patterns on the market forecast chart. We obviously don't have a bear tag yet, which would be light green shading and a yellow line. So we don't have that yet. But that's a big change in sentiment that we haven't seen. We haven't seen this kind of really strong short-term pattern in a while. Like that was like the last one that we had right here, where we also broke above 40, 50, and 60 on the near-term line. Excuse me, 40 and 50, and then the momentum line was higher. You had another instance of a pretty good near-term rally here, but we only crossed 40 there, and then the next day we ended up crossing up. So this is the first time that we've actually crossed above both, all these lines, and the momentum line being so extremely high, above the 90th percentile. So a very good move, and could be a change, right? Could be a precursor to a change and a downward trend that we've had for quite some time. Of course, breadth was extremely bad today. Again, breadth was bad. You can see the number of new lows really ramping up, and that actually produced for the second time here, the first time being October the 10th, produced a Hindenburg Omen. But when you look at like the number of stocks above the 50-day moving average dropping down to now almost below 40%, and the market was, remember, the market was flat. The Nasdaq 100 is actually up today, and so again, that goes back to this idea of the S&P 500 is just going parabolic right now relative to RSP. Right. This is, give it a second here to load up. There we go. I mean, look at that parabolic move. And if I were to go all the way back, as far back as we can here, go back 20 years on this, you can kind of see again, like this is all-time highs that we've seen. This is a ratio that's 86% correlated with the S&P. You can see where the RSI is. The RSI is up to well above 70 on that. The PPO is up to a pretty strong level. Relatively speaking, the CCI is up to a very strong level. The DMI, the positive indicator, is up above 40 now. So this is a very, very strong parabolic run. But again, it's a reflection of the fact that when you look at what's leading in this market right now, we'll just go back to here. Let's go to the last 2 days. Like so, because remember, the breath was really bad yesterday too. But if we go to the last 2 days, and there's the FOMC meeting, there's only one. The S&P's up 0.25%. There's only one sector that's above zero over the last 2 days, and that's technology, and it's up. It's not only positive, but it's like up almost 2% in 2 days. It's a pretty good move, and everything else is underperforming the S&P, and everything else is negative. It goes to show again, that's why we're getting that Hindenburg Omen. The Hindenburg Omen occurs when you have new highs and new lows as high as they are, and that's what we saw, right? You saw the new lows there, but the new highs are also really strong when you look at the new highs. Above 150 themselves, like itself, so above its average too, so also very strong. The 50-day average for the New York Stock Exchange Composite Index is above, the 50-day average is above zero. We're still above the 50-day moving average, but the McClellan oscillator went negative, which again is this idea of advance versus decline, very, very negative advance versus decline here. You can see here down to minus 1173, the 20-day average now back to negative levels. So really, really poor breadth, and we saw that in that sector performance, and a little bit of a jump in the volatility today as well. And you can see, like, relative to the VIX 3M, we're back above this 85% mark, still in risk on territory. We don't get to neutral here, but you can see with the VVIX ramping up. I mentioned yesterday that the VIX had dropped all the way back down to where we were in late September, but the VVIX did not, right? It's actually dropped down to a higher low and is already back above 100, suggesting again that there might be some more upside to volatility here in the short term. All right, so that does it for today's Market Outlook preview video. Remember, I dive into a lot more detail in our full version, a 30-minute long version, and especially into a lot of those charts I just shared with you, to the point where I give you kind of my expectations of what I think will happen going forward as a result. As a result, we also have a trade idea that we put on at the end of the Market Outlook. Again, the full version of the video. You get access to that if you click this link, subscribe to our site at our foundation tier, just $29 a month. Again, you get access to all the Market Outlook full versions every day. We do one every day. You get access to the trades in those videos. You get access to the Market Outlook Live, where we put on those trades in real time. It's a live stream we do on our site at 3:30 Eastern Time. We also manage all the existing trades, which is far more important than any trade ideas, telling you when to get out of them. All right, so we talk about that. And then we also track the results. You get access to our trade tracker. We track the results of all of our Market Outlook trades over the course of time. So again, all of that's for just $29 a month. Thank you very much for watching tonight. Subscribe to our YouTube channel here with this icon or the subscribe button down below. Click the thumbs up icon to like our video. Comment on anything that stood out to you. Share it with anybody else. Follow me on Twitter at DavidSettle42 for more content between the videos. You can also follow me on LinkedIn and Facebook, other social media sites. Have a great rest of your evening, everybody, and we'll see you all tomorrow.